Welcome to tonight. If you're an established trader, you can be excused if you want, maybe pick up a few things, but this again is largely for those that are learning, developing, brand new, trying to get a foot in the door. A lot of these topics, of course, I talk about throughout other presentations, but tying it all together for somebody new saying, hey, what do I need to come in as a brand new person? Everything from equipment to training to psychology, what do I need to do in order to be a successful trader? Here's a slide you all get. I don't think I need to go over anything on there really, other than the fact that it kind of took me back for a minute when I actually typed it out, even though I've known this. Over 120 hour-long presentations. Isn't that kind of mind-blowing a little bit? Over 120 hour-long presentations, which are all available to you. And I really haven't overlapped titles. I mean, obviously some information gets a little bit overlapped. You can't avoid that. There are key topics that you always want to attack from different angles. Over 50 podcasts done in the past 7 years, and of course also a ton of educational articles that are all at your disposal, even as free members. Categories to discuss tonight. Try to stay very organized as usual. Who does this apply to? I want to take a moment to talk about that because it's very important actually. Where do you draw the line between really needing to understand everything that's involved with trading and what does trading mean as opposed to investing? And what do all these topics apply to? Who do they apply to specifically? I'm going to be very specific about that in just a second. And then for who it does apply to, we're going to talk about easy stuff like equipment, software, money. We're going to talk about experience needed going into this. And this may be very appropriate for you to hear even if you've been trading for 5 years, unless you're just fantastically successful. And of course, you may not even be here, but the experience needed is something that maybe is affecting you today, even though you don't realize it, even though you're not brand new. Same thing with psychological makeup. What you need to know to make money and your time and how to spend it. Sound like some good topics? Let's go. Who does this apply to? I started to go through each of these categories, meaning these categories, and divide the slide up between kind of a laid-back investor and more active trader, day trader, long-term trader. And I decided that was kind of silly because there's really just a couple of comments to make if you're a longer-term laid-back. Now, I use the term trader for everything. So to me, there's long-term trading, which in a sense could be divided kind of into two categories, kind of, the real long-term, like maybe you did from 2010 to 2022, and then the kind of core trading, meaning you're long-term, but not really thinking you're going to be holding for years, maybe just holding for months. And that's kind of the situation I feel we're in right now. And then, of course, there's swing trading, which is holding a couple days, and there's day trading, all styles of day trading from holding for minutes to holding all day long. So those are all the different categories. But there's kind of another category that I want to break out of here, and that's one of just, I guess you would use the term investor in this case, but just a laid-back person who's not really involved in the market at all. I talked about this person in my podcast, and this is somebody who started young, maybe just dollar cost average into the market over time. Every check puts some money in the market, just has it in the market itself, in a fund, whatever. You've been doing that for 20 years, and you don't care about the market. And so I know some people like that. And you know what? I think that's just great. I said that in my podcast. You're probably not here listening to me, if that's you, because you really would have no reason to be here listening to me, because you just continue to put money in the market. You figure over 40 years it's going to be fine, and you just average in, and you have no intention of ever taking anything out. You're just going to keep doing what you're doing. I applaud that. That's great, especially if you started a while back. If you were to say, hey, Paul, I want to start doing that today, I really don't care if you're 20 years old. I don't think that's a smart thing to do right now. Naturally, if you're not involved in the market, you probably are not going to try and get too involved with timing things, so to speak. But starting to put any serious money in at the end of a 14-run bull market is just statistically not a smart thing to do. The problem with this is that it's only about 6% of the people that are in that category. And I'm talking about people, if you look at surveys and statistics, there are 94% of the people would say that they are not ready for retirement or on track for their retirement. Now, there's only 6% of people would say, hey, everything's fine, leave me alone. If that's you, if you're in that 6%, you're probably not here. If you are, you don't need to listen to anything. You're just going to hang on forever. Well, that's great. A couple of things I want to point out to you. There's two forms of trading in my mind. Well, not forms, but there's two time frames. There's the longer term where you're trying to take care of your long-term investments and retire on that. And then there's a shorter term that some of you may or may not be involved with, but it's getting income from day trading. If you are in that longer term category and you're being more active, now I know I don't want to make this confusing, but let's just take these people that are the passive investor here, okay? This is really not going to be devoted to you tonight because there's nothing to say to you. You've been averaging it for years. You're never going to take money out. You've never considered selling. You're in great shape. I don't suggest you start doing that today, but if you've been doing that for years and years, congrats, you're fine. And basically, I mean, here's the one-page summary for you. What do you need? You need a laptop. You don't need anything. You just got to track what you do. You don't need experience. You don't need psychological makeup because you're just hands off. You don't need to know anything to make money, and you need really irrelevant time because you're just saying, hey, I'm putting in $1,000 every month, whatever it is. I give it to some guy. I just put it in the market in my bank account, whatever it is, and I'm just going to let it go and don't ever talk to me. That's fine. So you're done. We're done talking to you, and that's 6% of the world and probably 0% of you that are here. However, if you are long term, but you're more hands on, like you pick some stocks, you get rid of some stocks, you react to tips, you decide, oh, the market's too high, I'm going to sell, oh, it's a good pullback, I'm going to buy. If you're active, even if you're only buying every month or two, then you are very much in the category I'm talking to. You are, I kind of call that, the core trader, if you will. Swing trading, day trading, all these categories are who I'm talking to. It very much applies to you. Yes, long term, if you are hands off, if you're not hands off, is a dangerous category, no different from any others, because you can mess things up. So this tonight is devoted, all the following slides will be devoted to everyone listening to me, unless you're just completely passive, and if you are, you're not here. So basically, it applies to everybody. So I talked about that in my very first podcast. Core trading, swing trading, day trading, whatever you're doing, it's important to listen. So if you're just passive, you don't care about any of this. If you're not passive, here we go. Equipment, money, software. This one slide I did divide up a little bit because if you are longer term only, if you're not swing trading, day trading, actually I divided the slide long term or laid back swing trading. Now swing trading, laid back means that you're working another job, you come home, you look at daily charts, and you make some orders, to your broker before you go to work when you get home, whatever. In other words, you're very laid back. If you're very laid back swing, or if you're long term, you really don't need much of anything in terms of equipment, software, or money. No matter who you are, you need a broker. You have to have somebody to handle your funds. I'll talk about it in a second. But if you're only long term, you really just need a laptop because you're looking at stuff after market hours. Most brokerages, I think you can open an account for $10 at Robinhood or whatever. So you really don't need much in terms of equipment or money or software. So wherever you like to go. If you're day trading, it's a little more of an active style and it requires a little bit more. You need to have an updated computer. You need to have, I would say, 2 minimum monitors. Of course, the size matters, but 2 minimum monitors, a good internet connection. Charting software is usually tied to your broker. Now, obviously, you have to have a broker to handle your money. I mentioned before, I don't really give broker recommendations. I'm the guy to talk to about learning how to read charts, but the brokers I've used for years for particular reasons. They're not necessarily valid. And what I did do was, it's almost a year ago now, I got everyone together and we had a little brokers meeting, just an open house discussion to say, hey, who do you use? What do you like? And after doing that, everybody knows that one of my platforms is TradeStation because you see the charts all the time. And after doing that, I think I would say that TradeStation is just great. I mean, nobody's convinced anything was better than that. There are pluses and minuses to other things. But I think you got to do your own research for a broker. And these days, virtually every broker is tied to a charting platform. So if you're new, you probably don't care a whole lot about your charts. But if you've been used to a certain look on charts, you probably want to find a platform that you like the charts on. So you do need to get a broker. You need to send in money. You need to get used to their charting platform. You also need to have $25,000 minimum if you're going to day trade. If you're not day trading, you just need minimal deposit, whatever your broker requires, all right? So that's what you have to have. You have to have a broker, you have to have a computer, you have to have internet connection, you have to have software that allows you to trade and to look at charts. That's really it. Optional, you may want to pick up some scanning software. I don't think it's necessary. That's why I put it as optional. Some people like to run mechanical scans to look for things. I like to find, climactic buy setup. So I'm not saying me, I'm saying theoretically, if you like to find very beaten up stocks. You could run a scan that finds things that are more than 10% below the declining 20 or something like that. So that's an optional thing that you could have. All right, so that's an easy one like the slide said. Any questions about anything on here? Now we get to the more important ones. That's, just minimum things that you need. If you have any questions, you don't want to answer them, if you don't want to ask them, feel free to email me, of course. I am Paul, P-A-U-L, at Disciplined Trading Strategies. I'm not going to write all that out. Next, experience needed. Now, here's a big one that confuses a lot of people. You need no experience is needed if you get trained. Now, if you have no experience and you're not going to get trained, I don't know how you even begin to think you're going to survive in the market. You know the failure rate. Well, at least you know what people say about the failure rate. I don't really know what it is because I don't know what you call failure, what you call success. But suffice it to say, I agree with the general concept that there's a huge, huge failure rate. But of course, that includes all the people that come in with no experience and no training. What's the only thing worse than having no experience and no training? Anybody want to take a guess? And I mean this quite seriously. What's the only thing worse than having no experience and no training? Well, Eric, yeah, that's even more you need to say. Having no training and having experience. People with experience are usually the worst traders I've ever seen. They're just out there hunting, pecking around. No offense to anybody. I just want to make this point, and I'm not saying it for any reasons for myself, it's just reasons to help people in general. I've never found somebody who made it on their own, and I've been asking. I had a couple people that said maybe I did, but they also said at the same time, I want to take your seminar program. So I'm not really sure how to read that. It's very difficult, and people that go out and try it on their own, they are just usually pathetically bad. I'm sorry, that's just what it is. The market is not something that's intuitive. It's not something that you pick up, and these are smart people. I'm going to talk about that in a minute. These are smart people. So you have to be very careful how you start off. And what I always say to people who do come and ask me questions about the seminar program is, they're worried about their experience, and I emphasize, hey, the less you have, the better it is. And that's something I unconditionally believe and have proven through just my, I won't call them statistics as I don't track in a spreadsheet, but for my own knowledge of people that I've trained, the more you come with prior quote unquote training and knowledge and playing in the market, the more difficult it is to train you. The best are people who are pretty new. So experience needed, you simply don't need any. What kind of if you're talking about experience, so what about non-trading experience? What about your background? What is a good background to have? Well, theoretically, pilots are good traders. It's unbelievable how many pilots end up having a DTS. We actually had 4 in the room at one time, pilots. They tend to be the right mindset because you live and die by a checklist, because you to some degree trust your instruments like you would trust charts rather than what people are saying. Bad jobs, there's a lot of them. A stockbroker, I don't even want to train a stockbroker. I just go somewhere else. Attorneys are generally bad because they justify everything. That's what they're trained to do. Architects and engineers are just looking for mathematical precision that doesn't exist. I should have put doctors on there. Doctors are the worst because they're always trying to quote unquote save the patient, so to speak. When they see a trade that's dying or is on life support, instead of killing the trade, they can't do that. They want to keep it alive and put more money into it and they average down. It's absolutely true. When I used to mentor people years ago, I mentored 4 doctors and they were all the same way, and they even admit it. They said they just, they can't take a loss, so to speak. If you are not trained, you should not be trading with real money. And the one thing I've been pleading for people for a year now is just simply do not lose money playing around in the market. Don't lose anything. Just paper trade until you can prove you can do it. Feel free to send me trades, even if you're not anything subscribed to DTS. I'll gladly look at whatever you want me to look at if it's helpful. No experience is good, and it's a big deal. I think it's a pretty big deal. Prior job is not a big deal. I think prior jobs are things you overcome. It's not a big deal. Just understand that almost all job skills are not transferable to trading. That's probably the big one, is that no matter how smart you are, no matter how you made your money, those skills don't transfer to trading. They just don't. It's a different world. And as you've heard me say in other environments, that I think one of the best traders would be a 15-year-old video game player, to be honest with you, because you don't need any kind of math skills or education beyond fifth grade in terms of numbers and general education. You just need to understand what charts are about and how you read them and why we look at them. All right, what you need to know to make money. What you need to know to make money is technical analysis. Because, and here's the quick way to say it, and unfortunately this is back to back with tomorrow where I will talk about this more, so I'm not going to talk about much here. But because it incorporates all known and to some degree all unknown information about the stock's fundamentals, future earnings, economy, and everything else. It has to do that by definition. It's simply what the case is. It's been voted on by 25 billion people, or whatever number you want to pick. Everybody has looked at everything about this stock, and they have determined in an open auction that it's worth $26.33. And it is beyond silly. It is pure stupidity. I'm sorry to say it this way, but it is pure stupidity for you to look at a stock that's trading at $26.33 with all known information out there, and for you to look at the internet and say, well, I think it's worth $1 more. That's just insanity. Unless you have some really special insider information, which is probably illegal, unless you have true insider information, you have no edge over anybody. You just have your opinion. Opinions generally don't make people money. To the informed, there is no argument about this. There is no discussion. Charts are what you need to understand, technical analysis, and the less you try to ever focus on something else, the better off you will be. Paul, why do we listen to all day long the news people talking to us about how important economy and fundamental and all this good stuff is? Well, because they have to have something to talk about. And remember, I'm not saying that stuff is irrelevant. I'm saying that it's built into the price already to a degree to which you do not know. And this is proven day after day after day after day. We just had a 5-month rally, crazy rally, in the midst of interest rates being hiked every single time. How does that jive with your understanding of the economy and news and everything else? There's so many examples. There's almost more counterexamples than there are accurate examples. So you just have to understand that. And I know most people have this psychological need that they want to feel important and understand what they're doing. And they feel the way to do that is through understanding what a company does and what the fundamentals are and what the economy is doing and what interest rates are doing. For your personal life, if that is something you like to know, that's great. For trading, it will only hinder you. Side benefits. Other than for your own personal reasons, there's no need to listen to news, listen or look up earnings, do any kind of internet research. Why in the world you would pull up a stock's earnings report or listening to the earnings call, why you would do that, I'm just blown away. I have no idea. It's the silliness of that to me, I cannot even explain. And I'm sorry if that offends some of you, but you're not learning anything by doing that. If your curiosity and just being a human being, you want to hear some of the stuff, that's fine. But number one, you don't need to. But number two, think of all of the time you can save. I have so many from untrained traders. Sometimes I get people sending me their trading plan. And it's amazing how many start off with an hour of looking up this and looking up research and listening to this and going to the website to find out about the earnings and blah, blah, blah. All stuff that's just irrelevant. So number one, you don't need to. Number two, think of the time you save. And number three, I want to be clear, it's actually detrimental to look at this stuff. You may not be able mentally to short Qualcomm when it just gave a great earnings report. Yet it might be exactly the thing you're supposed to do. And you read the report and you say, wow, the stock's doing great. You don't understand that everybody who is ever going to buy Qualcomm already bought it expecting a great report or expecting maybe even a greater report. And you step in like Mr. or Mrs. Naivete, read the report and say, oh, this is a good report. I'm going to go long Qualcomm. And you get your head handed to you for 5 months. It happens all the time. Here's where I want to spend some time. Let me take a vote from you guys because you guys have been pretty quiet out there. Let me ask you a couple questions here. What do you put down? Put down T or P? Technical or psychology? Which eventually ends up boggling most traders, do you think? Understanding charts, technicals, technical analysis, T, or psychological issues, put a P. Psychological starts with P. Yeah, it's a little bit of a two-pronged process in a sense because understanding charts is the entry requirement, so to speak, right? You can't go anywhere if you don't know charts. But then what ends up getting people is oftentimes the psychological part of it. In other words, they will send me trades and they are picking charts that I think could have them making money, even good money sometimes. And yet they're not making money because they don't handle the winners right, they don't handle the losers right, and all that comes down to psychology. Now, here's a big point and a big discussion that actually was the topic of a separate presentation that I did a while ago. I don't even know the title of it. I get a lot of people who come to me saying, oh, I know how to trade. I don't need any training, but I have psychological issues. I'm in a trade and it starts going up and I want to get it up here somewhere and it does this and I get out and then it goes to here. And they call that a psychological issue. What do you think about that being a psychological issue? That when you're managing a trade, you get shaken out. You get scared out because you're up some money, you don't want to give it back. Is that a psychological issue? It is to some degree. I mean, psychology permeates everything. But it's not really the issue for 90-some% of the people. And I did a whole thing on this. It can be, but here's the problem. And I've had a hard talk with some people about this, especially, I got this idea a year ago talking to somebody because he's claiming psychological issues. The problem was he didn't have a clue what he was doing. If you have no confidence, in other words, let's say this is me in this chart. This is my trade. And I had just high conviction. I'm getting here, right? I'm not going to get out here because I have confidence in what I'm doing. I'm not saying I'm right all the time, but I'm saying I'm going to stand by this. Now, here's a guy who has no right trading almost. He has no idea what he's doing. And he thinks he's getting here, but when it starts to boggle, he goes, well, I don't know if it's going to get there or not. And I'm up $50, I'm going to take it. And they walk away. It turns out he had a good trade and got there. And he says, oh, psychological issues. If you don't understand what you're doing, you have no confidence, and you always have psychological issues. The example I have to give for this, because I think it's so right on, is speaking in front of a lot of people. I'm not going to ask you if any of you have, but I mean, I've spoken to large groups about trading in person. This is some years back. And I have zero fear. I mean, zero. Absolutely no fear. Just like I'm sitting around, talking to my wife. Just zero fear at all. I don't care how big the group is or what the topic is, because anything anybody asks, I could answer the question without even thinking about it. I could be thinking about what I have for dinner that night and answer their question. I'd never been asked a question I couldn't answer right away in decades, right? Yeah, maybe that was a bad example there, I guess. A good point. So when you have that great confidence, you know what you're doing, you're confident, you don't have any psychological issues. But take that same person and put them in front of a large group of people, and let's say all of a sudden they're speaking for their company, and the boss comes up and says, oh, you know what, Jackie's not here today, you got to do her topic on human resources or something, and you really don't know much about it. Here are the notes. Well, you're going to be scared to death, right? And it's not because you're dumb, it's not because you're stupid, and it's not really because you have a weak psychology or a fear of talking in front of people, right? You're the same person that just was fearless talking about trading, right? But now you have to talk about a topic you don't know, and you're a bumbling idiot. And it's not because you're a different person, it's because you don't have confidence in what you're doing, because you don't know the subject matter. So my phrase is, you have no right to claim psychological issues until you've proven you know what you're doing with charts. Does that make sense, everybody? This is a huge topic for a lot of people. This is a huge topic. Let me say that again. Do you get that? You have no right to claim a psychological issue. You may or may not have them, but you don't have the right to even talk to me about psychology until you can prove you know what you're doing. Because you don't have confidence. If you don't have confidence, well, everybody's going to be a psychological mess. Does that make sense, everyone? And why do I have the right to say some of these things? Well, number one, I've been doing this forever. Number two, I've been training people forever. Number three, I talk to people all the time, and I encounter this, and I start to realize that, boy, I just kind of open my mind. I still learn all the time, certainly in terms of teaching people. And all of a sudden I talk to them, I said, you know what? This guy just opened my mind to something. It's him, but it's also a lot of other people. They don't know what they're doing on a chart, but they don't need to take some kind of psychological improvement class. No, they need to learn what a chart is. And it's amazing how psychology tends to disappear when you know what you're doing a lot better. And that's another great thing about technical analysis. What are my slides later? I'm getting, it starts with the fact this is simply, okay, so psychology, number one, it's built in everybody, right? To some degree, everybody has a different psychological build. Some people just don't care and they're just good. Some people are scared of everything, right? That's something you have to deal with, and that's something that's not easy to overcome. And what is not built in may be accumulated through life experiences, right? You may have had something happen to you financially 5 years ago, and now you're very skittish about losing even, any amount of money in the market, so you're very skittish about it. Or you may have traded before, and you may have accumulated psychological problems. And this is one I see a lot, let me tell you. I've seen people that follow a stop loss like if they violated by a penny, there's somebody that can come in with a machine gun and just tear them apart. I mean, they're just scared to death. And clearly, this is somebody who lost a big part of an account or all of an account because they let trades go until their account was broke. So now they're scared to death. They're not going to do that again. Well, that's good a little bit. It's also bad a little bit because you have to manage appropriately and accordingly. And being scared to death, you're never going to make money doing that. So there's certain ways that you manage in terms of entries. There's ways you manage stops. And being that type of a trader where you're just like, oh, okay, I'm out of here immediately, not a good thing. You're not going to make money doing that. So a lot of psychological things can accumulate that is built up into you. How to handle helpful comments and psychological makeup. First, the more objective you are, the easier issues are to conquer. And this is the benefit of technical analysis, a side benefit. It's not the reason we do technical analysis. We do technical analysis because it is the only way for 99.999% of people to make money. It's the only way. But a benefit of that is the easiest way to handle psychologically. In other words, if you're in a stock because you just heard somebody upgraded or you just heard they're coming out with a new product and it's going the wrong direction, well, you're a mess. I mean, you're basing a trade on something you don't even know. It's something you read, something somebody said. On a chart, we're as objective as we can be. We're saying, here is an entry to the penny. Now, I may decide to alter that at some point, but here is my stop on the chart where it should be to the penny. I may decide to alter that a little bit, but there is where I know things are not going right, and I know I need to exit very soon. So it's a very objective process. So understanding technical analysis goes a long ways to eliminating psychological issues. Entries and stops are clearly and logically defined. Okay? And then as I just mentioned, I kind of jumped ahead here. The better you are, the less psych will bother you. Confidence is the answer to psychological problems. I just put that as a shortcut. Confidence is the answer to psychological problems. And you can have confidence if you're clueless as to what you're doing. Psych filters in mostly in management. Think about that for a minute. Now, there are problems probably throughout trading for a lot of people. But management is the key for a lot of people. Management is where a lot of people really, really blow it. Because this is where you start to get to that I'm a loser category, right? You're up some money and you're green and you like that, and all of a sudden you're red and you don't like that. And this is where this ridiculous concept of break-even stops comes into being. Break-even is a psychological crutch. It has nothing to do with trading. It has nothing to do with the chart. Now, recognizing a trade has little or no risk may be important in terms of money management, taking another trade, but there is no concept of getting a stop to break even. It's one of the most common things that you hear and see people do all the time because it's a psychological thing. Management is where you eventually make or break it as a trader, and I'm talking about any of the time frames of trading. It doesn't matter what you're at. Again, the only exclusion is people who are hands-off. I'm not even talking to you. But anybody who's a longer-term trader, if you're managing your own stuff, if you're a swing trader, if you're a day trader, you will live or die by your management, period. Obviously, the trades you pick are hugely relevant and very important, but the point is that even good traders with good chart knowledge who find good setups will still not make it if they don't manage properly. Agree? The last comment there in management to me is that the entry is everything to beating psych. The entry in technical analysis is everything. I've had people argue with me about this, and I'll just make it real simple. If you don't agree with me, you're wrong. That's all there is to it. You're just wrong, period. Maybe I'll explain it to you sometime if you want to have a longer discussion about it, but the entry is everything. It permeates, for one thing, it permeates your management. There are many, many reasons. Let me give you the first and foremost one. If you have some kind of chart pattern, I'm drawing up here, and you get in here, and then it starts going sideways still, right? But I got in here, and it keeps going sideways. Who will be able to manage better? Me with an M? That's not very good. Paul? Or the other trader, T, P or T. If I got in here, another trader got in here, we're both still in the trade, and it's us coagulating in the middle, who's going to be able to manage better? And why? The reason why could be two words. Who's going to manage better? The trader that got in up here, and now we're going to say long, got in long up here. Or Paul who got in here, and we're coagulating here. Eric says, Paul, any other votes? Who's going to manage better? Trader up here with this entry? Obviously, I have a better entry, but who's going to manage better? But why? Why am I going to manage better? Say the words that will help you tomorrow or the next day, Why no fear? It's a better entry, but what psychologically? I'm green. I'm green for the minute I got in the trade, and I'm green the whole time this thing is coagulating, right? I'm not even at the screen, right, Eric? I'm out doing something else. You, trader up here, are sitting here, okay, I'm down half of my risk money, right? And what are you thinking when you're down half your risk money? What are you thinking immediately? Your stop was down here. You're not near your stop really, but you're down half your money. What are you thinking, everybody? Yeah, but why? Why would you close it? Your stop's down here. What are you thinking about? When you get in a trade and you're immediately red, what's the first and foremost thing on your mind? Three syllables, three words, 3 syllables, 1 syllable, 1 syllable. Minimize that loss, right? Is it true, everybody? When you're red in a trade, the first thing you're thinking is minimize that loss, right? Let me ask you a yes or no question. Everyone listening, yes or no? A good goal for a good trader should be to minimize losses, true or false? True or false? A good goal for a good trader should be to minimize losses. Now, I said some key words in here. I said that a good trader, a good goal for a trader should be, no, it is not a good goal for a trader. It is a terrible thought process. It's exactly reverse of what you want to do, and it's the reason so many traders fail. You never want to have a goal of minimizing losses. Let me tell you why. If your goal is to minimize losses, what you will do is you will accomplish your goal. You will have a whole string of minimized losses. Now, the reason this appeals to some people is because, no offense here, but if you're a losing trader, if you lose most of your trades, if you're losing money, right? Well, then minimizing a loss is helping you. You're still losing money, but you're losing it slower. Your goal is not to lose money slower. It's to make money. If you are a good trader, you will find 100% of the time that minimizing your losses is simply taking you out of good trades that are winners. Here's an important question for all of you. Carmelo, let me give you your poker thing. I happen to like poker. Used to play a lot. Just friendly game with the friends. But I'm not saying that you shouldn't minimize a loss. I'm saying your goal should never be to minimize losses. Now, something could happen with the chart, and this would be your poker equivalent, right? This would be your poker equivalent. So something could happen with the chart where you're going along, and here was your stop, right? And you're going along, and something happens. Boom. And you say, you know what? Calm, rational person, I'm fine, but looking at this chart, according to my plan and the way I trade, this is my new stop. Okay, Camilo? That's fine. Because what you're saying is, okay, I have a good hand, I'm not getting out, right? So if you did come back down and get under here, you've minimized the loss, and that's fine. And you do that because if you were up here and you start falling, you're looking at your hand, right? In poker, you get out because you don't have the cards. You have a bad hand. You're saying the odds are that this hand is not going to win. I no longer want to put more money into it, right? Well, there can come an area on the chart where you would say that also. But to just blindly kind of raise it inappropriately, right? In other words, we follow the chart, period. And if that means that you are supposed to raise the stop to a half loss, you do. If you're supposed to raise the stop so you only have a $50 loss. I've seen people that actually will raise their stop to make sure that the trade is like $50 green instead of $50 red, which is just the stupidest thing in the world. Green, red, it doesn't matter. $100 is $100. Whether you lose 400 or 500, whether you make 400 or 500, what difference is plus 50 or minus 50? Well, to some people, it's everything because you just don't want to see the red on the screen. So you don't artificially raise stop to areas. And it's the psychology of it. It's just the whole thing. Again, working with people so much, it's like people get in trades and almost their immediate thing is to raise the stop. Now, there's different trading styles, and the way I teach people, you can trade any one of those styles is fine. I'm fine with it. And there are scalping type styles where you would be raising stops pretty quickly, but you'd be raising them precisely based on a chart, even if it's a 1 minute chart day trading, what is scalping, whatever it is. But my point is you don't just simply raise it out of fear, because if you're that fearful, you shouldn't be trading that much money that you're at the current moment, okay? And it's a big deal to me. It's a big deal to me. So this is where entry comes in partly, because if you can get those great entries, and there's a big difference how you manage when you're green the whole time as opposed to being red the whole time. And here's the last topic I want to talk about, and this is kind of a deep topic, if you will, so to speak. But you will start getting a lot better when you just simply accept the fact that you don't always know what's going to happen. Well, excuse me, we never know what's going to happen. That's number one you have to accept. And this is almost like a little ritual you should do in the morning if you day trade, or every Monday if you're just swing trading or longer term, is saying, number one, look, I do not know what's going to happen this week. I don't know for sure. I do not ever know for sure what's going to happen. Nobody ever does. What we do is we trade odds. And there are times where I have pretty good odds, and I feel I have good odds to do things. And there's times where we feel we don't have very good odds. But just accepting the fact that you never know, and that you're always trading odds, and that you follow a certain procedure for when things are going well, when they're not going well, it will help you tremendously. And to really understand technical analysis, one of the things that confuses people is that, I call it like my moment in time entry. But you don't even have to know the direction of prices to make money when you really understand technical analysis. It's about finding just that moment, finding that little birthplace of a move, finding the explosion of a move. And I'm going to show you an example here in a second, just the gratuitous chart feature. As a matter of fact, it's coming out. Yeah, it'll be coming up in a minute. And I'll talk about that more when I get to it. I just put one little trade in here from yesterday because it exemplifies everything I'm saying today to some degree. Another big topic here, which I think is next, is how you spend your time. Here's what most traders do. Most traders. Here I'm kind of talking as a day trader. I did this just as a day trader. As a longer term, I'm not really sure what people, well, you can make the same equivalent comments, but as a day trader, this is what most day traders do. Spend 7.5 hours at the monitor watching the market. So 6.5 hours the market's open, an hour pre-market, got to sit there and watch every tick of everything because you don't want to miss a trade. Right, here he is right there. They spend 2 hours preparing for the market, but most of this is probably focused on worthless activities. Checking out all the company earnings reports, checking out people's recommendations, broker recommendations, all completely worthless things. So they spend all this time, 2 hours of it usually worthless, and they spend zero on any kind of chart follow-up or statistical analysis of what they are doing. So this is all completely wrong. This is the hallmark of a complete loser, period. Now, there's different styles of day trading, and I'm not saying everybody has to follow exactly what I do, but generally speaking, as a day trader, nobody should be sitting there more than 2 to 3 hours a day, period. I don't care how active you are, what you do. You just can't function like that, number one. And number two, I don't care what time frame you're on. I don't care whether you're scalping or longer-term day trader. You do not have the odds throughout the entire day, period. You just simply don't. So you want to come in and hit it at the best time. For me, I'm sitting there from 9:30 till 10:30, maybe 11 o'clock on some days. And then if the chart pattern dictates it, I may come back and take a peek at lunch to see if there's another trade to do. But that's it, because that's all I think that it should be. Your time at the monitor could be as low as 30 to 60 minutes as a day trader. That'd be perfectly fine with me as well. What is not acceptable is to sit there all day long. You can't function like that. You don't have the odds doing that, period. It's very synonymous to a blackjack player. They hit when the time is right. You don't sit there the entire night betting equally because it's guaranteed to lose to do that. Spend 30, 90 minutes max in prep time looking only at charts. This will vary with style. And here's what varies with style some. Your prep should be 100% looking at charts, period. There's nothing else you look at. As a matter of fact, the best thing you could do, I generally speaking, my rule is I don't even put the news on in the morning. Sometimes I do, but I am, I am so embedded in making fun of the news, if anything. I'm putting the news in if I do just to entertain myself or as a human being to hear what's going on. But it never would influence me. As a matter of fact, it's almost a reverse thing with me. If I hear something's good, I'll take it as bad. So generally speaking, don't put the news on, don't put anything on, put on some music and look at charts, whether you do it at night before, whether you do it during the day. And same thing if you're swing or long term. You pick your time where you're looking. If you're swing trading, maybe you look every night. If you're longer term, maybe you're looking on the weekends. You just get your charts out, put on some music. You forget about everything else. You don't focus on any kind of news that came out, and you just focus on what's going on in the charts. And here's the important one. So I'm talking about as a full-time day trader, you could be spending as little as even an hour, 2 hours a day. You could be 2 hours a day prep and trading, even less than that. I'd be fine with that. I probably spend 2.5 to 3, but a little bit of that is because I run a trading room. If I wasn't running a trading room, it would probably be a half hour less than that. There's some time I devote to doing extra work for the room that I wouldn't necessarily do just for myself. But here's the big thing, is that where most traders do nothing here, this is where you need to spend 2 to 3 hours. Now, you should be at the very high end of that if you're new or if you're not making money. And if you're not making money, you are new. And as a veteran, you'd be with the lower end or even way less than that, maybe once you're really well established and know what you're doing. This is where all the gold is. This is where you improve. This is where you learn. This is where you get better by following up on your trades, from looking at the charts of the trades you took, by looking at the statistics of the trades you took. There is so much to learn here. This to me was my success, was doing this. And nobody ever told me about this back then. I just did this on my own. When I started, the education was almost what you would call zero. So this is stuff I just learned to do on my own and did on my own. It's the double truth with it. It is. All the gold is in those trades. And of course, psychologically, the hard part is when people have a tough day, they tend to not want to do this follow-up work, and that's when you should be doing it. Everybody likes to go and, fill out their little sheet and look at the profit they made, but when they have a bad day, all of a sudden it's, oh, well, maybe we'll just skip it today. And that's where you learn. That's where you learn what you're doing right, what you're doing wrong. It's a whole long lecture that's not part of what I'm doing today, but it's more than important. It is, in a sense, the secret to learning to trade, whether you're being trained or trying to learn on your own. Any questions? I just have a couple slides left that are just kind of summarize things based on a trade to kind of make my point if I could. I probably will set up one of those impromptu sessions next week or sometime soon, because I know this was an important, but probably I know traders love to see all the trades and show me this and show me that. And this is more in the boring category, yet it's very, very important. All right, here we go. The gratuitous, close your eyes, the gratuitous chart scene. So this is from yesterday, and this was KSS. I didn't mark up the chart at all. I'm just going to kind of do it live here. But what I make the point is, so that was yesterday. That's the green bar from yesterday. So I get in at the bottom of the green bar somewhere. So that's what we'll look at. Here are the numbers. It was entered at 9:42 in the morning. I took it to split in half because I took a third of the profits here and 2/3 I walked away and let it go. The back 2/3 obviously was a huge move. That's not the typical thing. It was an exceptionally good trade. That was yesterday. Made 3 times a day's goal in that one day. And let me go on to the next chart. The daily chart was fine. The daily chart was not the source of the strategy for this trade. This is a day trade. The daily chart, the words that I use, justify or allow the trade. The chart that I liked was this chart. So when I was scanning, you get what I'm doing here? That's the chart that I saw, to the left of the black line. That's the chart that I saw. Now, a lot of times when I'm scanning, not a lot of times, maybe once a week, I run across a chart and I remember it's kind of like, okay, the next morning, okay, that's the chart. Like this chart, love this chart, got to do this chart. This, to me, is just a beautiful setup. Now, this may not be what a lot of you consider to be a beautiful setup. A lot of you roll momentum, and you like charts that are looking like this, that are almost vertical, and you try and catch, 10 minutes of the move the next day, whatever, that's fine. Now, the point I want to make here is that obviously this was a nice trade. It was yesterday. I didn't go back into the archives from 1942 to find a good trade. But this is Kohl's, KSS. For me to put this on my favorites list and then the next day to take this trade, here's the 5-minute chart. And you can see the entry here was what's a 5-minute chart? So right in here somewhere was the entry for 1938. So right in there, coming over that little topping tail. And I took the proverbial cheap third somewhere, and then the rest of it I got right off the high. You can see the numbers. I don't know exactly where it was. But here's the thing I want to point out, is that I happen to know KSS is Kohl's because it's a big popular stock, and I happen to know Kohl's is a department store because I've been in Kohl's. But a lot of symbols I trade, I don't even know what it is. I honestly don't, and I don't care. I don't know what Kohl's earnings were. I don't care what any analyst said about them. I don't know anything about them. I didn't read anything about them. I didn't do any research on them. As a matter of fact, when I found this chart, the way I scanned, I didn't even know it was Kohl's. I only knew it was because in order to record the chart onto a list, I had to write the symbol down, KSS. So I knew what it was. And I don't know how else to make this point clearer to a lot of you, that it's not, oh, the chart is the timing mechanism or blah, blah, blah. The chart is everything. There's nothing else. I don't care what anybody said about this. I don't care what's happening with the wars. I don't care what's happening with interest rates. It is nothing. And by the way, this happens to be a day trade, but the exact same comments about long term. Yes, the exact same comments about long term, period, no discussion. I just sent you a slide last week maybe from a long term trade. And it was the second one I sent you in a month. Actually, it's the exact same type of trade. It was the birthplace of a move. It was snowflake. And it was the birthplace of a move. And it was a trade that I would do and take, and I really don't care what else is going on in the world. It doesn't matter. Because you know what? All that is built into the chart, right? And whenever somebody says, you might say, oh, Paul, but they're going to raise interest rates tomorrow. Okay, you know what? Everybody knows that. The chart knows that. The world knows that. The stock knows that. And if there's something that happens, yeah, stuff happens. But we play odds. And to me, this is what it's all about, is finding charts like this. And it's all technical. Everything about it is technical, and there is nothing else. And when you're doing this, just to make my point about psychology, I love this. For me, my personal psychological thing, I don't always do it, but most of the time I take what I call that cheap third, because now I know that I can go on to another trade because this one's going to be green no matter what. And then I walked away. I left. I just left the screen. I know some of you wouldn't think of doing that. I don't know how you sit there, to be honest with you. What would have happened, you guys in the room yesterday? Who's in the room yesterday for this? Who was in the room yesterday for this? And I don't care if you took it or not, but who was in the room yesterday? You were in or not? Okay. But I was gone, right? I left. I was gone. And my point is, what if I was sitting there? What if I decided to sit there? I got out of this right in here somewhere. Right up in here, right off the highs. I just happened to come back at a good time. I don't think I had an alarm set on my phone. I don't think so, no. What if I was sitting here? What would have happened? 20? Even me, Eric, I probably would have been out here. I mean, that was a lot of money right there. It was like 2 hours right there, over 2 hours. That's what I would have done probably, because for the same reason everyone else does. So one of my answers is I have the understanding, the skill, the confidence to say, you know what, look at this chart. This is in gear on the hourly chart, on the daily chart. This could have a big move. When you start taking day trades that are cohesive with bigger time frames, all of a sudden you can get bigger moves. And they don't all do that, of course. I don't expect them all to do that. Sometimes they take cheaper targets, but it gives you the confidence to walk away. And if you were, my point is, if you were the average new trader sitting here, even if you knew to find this chart and to take this chart, which a lot of people do reach that level that they would understand this chart, they'd probably be out of their whole trade right here. They'd just be done with the whole thing. And the problem is that you just can't make good money long term. I don't mean long term, I mean day trading or long-term trading. You can't make good money over a long period of time if you're just constantly taking the quick profits, because you're going to have losses. You have to have a balance in there. There's no right or wrong formula. There are styles where you can take much quicker profits and different ways to do things, but your balance has to be there. For most traders, unfortunately, it is lots of small wins, lots of small losses. They go nowhere for their whole career. Any questions It's 7:59 and 16 seconds. I just looked at the clock. That's pretty professional speaking there. 45 seconds early. Any questions, comments? I know this wasn't a thriller. I'll make it up to you by having a special impromptu session. It'll be more about some trades or some great stuff that happened, all right? As usual, if you have any questions, feel free to email me. I'm Paul, P-A-U-L, at Discipline Trading Strategy. I'm not going to type the rest of that, but you know what Discipline Trading Strategies is. Thank you, Eric, for recognizing that. I know sometimes these topics are tougher for people to swallow. If you're in the room, we'll see you in the trading room tomorrow morning at 8 o'clock to 8:30 when I'm usually there. Have a great night, everybody. We'll see you tomorrow.